You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockingest of tunes means it's time for the rockingest of shows. Yes, it's time for the option block. My name is Mark Longo from the old OptionsInsider.com. You guys know that's the place to go to get the deep, dark archives of our network going all the way back to January of 2007. Yes, if you can believe it, pretty much the primordial ooze, the origins of the options podcast world. There's a million of them today. We kind of, I don't know if it's a million, quite a few. We kicked it all off way back in the dark days of Jan 2007. You can find it all there. Also, our mobile app, available on all the major platforms, is also a good place to go. Really, really do your deep dives, do your homework. Stay tuned. I think the best of show should be coming pretty soon. So maybe keep an eye on that if you want some help surfacing all that great content going all the way back. We can maybe help you do that. And then some, of course. You can always join us on your platform of choice as well. iTunes, TuneIn, Stitcher. Subscribe, and you get the show delivered to your inbox. And if you really want it, I know a lot of you guys do, you can always follow us on Mixlr over there. Get notified the second the show goes live. I'll make it easy for you. It's every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. We do this little show here called The Option Block. Been doing it for, a while now. 700 plus episodes, I believe. So quite a lot to sink your teeth into. Hope you can join us there. And the live folks, they get bumped to the top if they have questions and comments and all that other fun stuff, even though we like you podcast folks too. And you guys get your questions answered too. You're just kind of in the middle of the old pecking order. All right, and joining me to help you do just that, including breaking down some strategery today. It is Monday after all. I am joined, first off, let's spin the wheel. Oh yes, it'd be hard to do the strategery if he wasn't here. It's Uncle Mike Tosaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show. How goes the Monday strategery? Are you feeling it, sir?
I am feeling it, baby.
All right, good to hear that you're feeling it. Get ready. We didn't have a chance to put a poll out, so you're left to your own devices this week, Uncle Mike, in terms of what the heck you want to talk about. You got about 30-odd minutes to prep yourself. And also joining us to talk all things craziness, that is the market, some earnings, some rallies, and some sell-offs, and all sorts of other fun stuff. Maybe if we're lucky, we'll even get into some VIX zones, listeners. We are joined by the Rock Lobster himself. That just cracks me up for some reason. The Rock Lobster himself, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the show. What zone are we in today, sir?
We're in the twilight zone. No, we're in zone 2. Zone 2. And you can learn more about that later, but we are in zone 2. But there is something a little odd cooking that I will share. I will share it.
You know I love me some VIX zones. By the way, if you had to remap all the zones in the wake of this new quote-unquote regime of volatility we find ourselves in, are you sticking with the 2017 zones?
Nope, I'm sticking with the zones are tried and true. So come president, single-digit president, come what may, single-digit president, come what may. The zones will still work. They are for all presidents and all conditions.
The administration be damned. VIX zones are VIX zones. All right, let's get to it. It's time to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block portion of the show where we break down what was going on, what was catching our own collective eye across the market activity. Another one of those weird days. We've been getting a few of these of late where the market's a little bit indecisive, shall we say. Is it going to rally? Oh no. Is it going to be unched? Oh no, it's going to settle the day down, and actually down with a little bit more gusto towards the end of the session. Most of the major indices off around 0.5%, maybe a little more Dow, a little bit less S&P and the Q, a little bit more, but right around in that 0.5% or so range after having, looked like it might have a nice day, nice start to the day. Everyone's kind of happy, digesting all the numbers. Things seem right with the world, talk of dialing back some of that trade war even more. Everyone was happy, North Korea, South Korea tensions finally perhaps easing. All was right with the world. Earnings, decent, some good, some bad, but not certainly an apocalyptic season by any means. And yet, all that bloom coming off the rose later in the day. So lots of interesting stuff. We'll get to some of the names that are popping off later on in the week a little bit. But first, let me go around the horn. Let's go back to that tranquil land of St. Charles, where in his own personal S&P is about 5,000 and the VIX is always about 2 because it's so tranquil out there. Uncle Mike, what was catching your eye in today's activity, sir?
Well, we like to have the VIX up at times too because we like to sell premium as well. So it just kind of depends on what the personal VIX is.
So it spikes to 14 every day at 255 just for Uncle Mike. Then it goes back down to 2. That accommodates your premium selling tendencies.
Should it be needed? It does. So no, but today on the markets, excuse me. Today in the markets, a lot of what we had, we actually had a little bit of a gap up from. Or what was happening last night. So going into today, with the markets coming up as they were, really we hit our highs, at least in the now 24-hour trade at SPY. Looks like we hit our highs probably around 5 in the morning Chicago time. Came down a little bit, and then immediately at the open we had buyers. Buyers lasted for not too long, about maybe a half hour into the day. It looks like we had our high of the day for the traditional trading hours, and then we just pretty much went lower the rest of the day. I think there was a lot of uncertainty with some of the things that are happening from a macro level. It doesn't appear that there was really anything. There was nothing bad that was happening along the lines of anything earnings related or anything along from that standpoint, but it just seems like there's a little bit more fear in the marketplace right now, not necessarily from the standpoint of VIX. I'll let Andrew address that more, although it was up a little bit today. But it does seem like there's a little bit more uncertainty from a macro level as to what was driving things down today. President Trump was not at the White House Correspondents' Dinner recently, and so that was something that was making headlines. We also have things that are going on in the Middle East in terms of, are we going to renegotiate our deal with Iran from the nuclear standpoint, even though are we going to renegotiate that because of the fact that we're talking with North Korea now. North Korea and South Korea are buddies now, it looks like, or the war's over anyway. So we have that's on the table. How's that going to affect our relationship in the Middle East? So there's a lot of macro things that are going on, but there's really nothing certain that has happened. And so combine all those things, and we have a market that's down a little bit today.
There you go. A long way around to a little bit of a sell-off there. Mr. Rock Lobster, we alluded to, jokingly, of your favorite things, the VIX zones. But you mentioned some changes are afoot. We'll get to that in a second. First, what the heck was catching your eye in this kind of topsy-turvy, slightly topsy-turvy, kind of unchanged, kind of flowing market we have today? And then we can get into all your fun VIX madness, sir.
Catching my eye was I just think we're all waiting for Apple earnings, to be honest. Every once in a while, it just feels like the Apple earnings are big, and then this is like one of those cycles. It feels like that. Also, I believe we have some Fed stuff happening. Apparently, the fact that peace is happening in North Korea or South Korea or whatever Korea you want to pick, the market doesn't seem to care too much. You would think that's better news than not, but nobody really cares. They cared a lot more when, there was, let's just call it more excitable talk about it. But, peace. But no, it's like, no, we can't do anything with peace. So that is, although it's probably good for the world in general, doesn't matter much it's not mattering much to stocks. It seems like everybody's already sort of priced in at least the normal, and and peace will be good, but not much for the S&P 500, I guess. Only bad stuff makes the S&P 500 really move. So as far as earnings have been pretty good everywhere. The Nasdaq, though, it seems it's kind of like having a hard time, where it does feel like that they're kind of at the peak of technology earnings, and that happens, every few years. But earnings overall have been pretty good. Growth has been pretty good. So that's sort of been driving things. But I mean, it's not like we're getting anywhere close to the highs we saw in January. So, I mean, I think that's the biggest part. What I am noticing, though, in, let's say, like the volatility spaces, like that June, May future and VIX, I think the VIX futures give a lot of information if you take the time to look at them. And that May it's hanging there. So it's almost like it's waiting for something. My guess is they're waiting for the stuff that's going to happen this week. The only thing I'm thinking about is what kind of a move we're going to get. But it's almost like the market it almost feels like there's no natural sellers of the May cycle right now. May, June is trading almost for the same price, which, with 2.5 weeks to go, there's usually at least $1 in it or more. So I think there's that part of the curve is showing some reluctance by market participants. They're not really buying the bull, even though the earnings have been good. I think they're a little bit worried about, what's the Fed going to do? It's enough to keep the vol from, although we did have a little vol sell-off this morning, it was really short. We got to a 2-week low, maybe 2-3 week low for VXX and the vol products. So the futures dipped down a little bit, but it did not hold on. So I think the big events are coming, tomorrow after the close for Apple and for some Fed speak, and the true nature of the volatility will reveal its ugly head.
It is ugly indeed. Speaking of all things, everyone's awaiting the earnings, and you're right. Apple coming off, at the end of June this year, so a little bit late. We can talk about them now, though. Of course, I'm teasing Uncle Mike. I like to tease him around Apple earnings time because back in the day, listeners, he used to trade a heck of a lot of Apple. Not so much anymore. He's kind of fallen off the bandwagon a little bit. He stopped drinking the Kool-Aid. He says they're not up to his innovation ratio spec levels that he would like to see. Apple having a decent day, shrugging off today's sell-off in the broad market with a rally right around 2%, little over 3 handles, closing right around 165.5 or so out there. Decent day for them. They're also doing some paper, as you might imagine. They are after the bell coming up on the first here, listeners. So that would, of course, would be, why is my system going? There we go. All right, 165.5. They are, of course, coming out after the bell tomorrow. And, of course, you have no show tomorrow, so we'll talk about them a little bit today. Doing nearly 500,000 contracts today, which is pretty much right around in line with their ADV, right around 492,000 contracts. So the lead-in to the earnings didn't drive a heck of a lot of paper. The calls slightly outnumber in the puts, about one, not quite 2 to 1, about 1.7 to 1 calls over puts, about 300K on the calls, about $1.80 on the puts. Also looking here, the open interest is actually kind of flat as well overall, from an overall level of about pretty much 1-to-1 calls over puts. We don't see any bias out there in the earnings. In terms of what they're pricing in coming into the show right around $8, which is right about 5% level for the straddle. I'll have to go search over here in the ORATs. By the way, listeners, if you haven't done so already, head on over to the Options Insider, type ORATs, ORATS, into the search bar there, and that'll bring up a lot of those free earnings reports I've been talking about. There's a ton of them in there. There's a ton of tickers. I haven't had a chance to go pull up if they have indeed got Apple in here. I'm looking here really quickly. APTV There's so many tickers. I'm looking here to see if they have Apple. They might have a recent one that does. If not, you can head over to orats.com. They probably have it there as well. ORATS. They do a lot of that stuff you guys have always been asking us for in terms of earnings analysis, and they do it back for quarters and all sorts of cool stuff. So interesting stuff. In terms of looking at the vol out here as well, let's see where we are here. In the front month is looking at about a 30 vol. And 30-day historical, though, also right about, not that far away, about a 28. So the risk premium, quote unquote, out there is not quite too high. I don't know, Mr. Rock Lobster, how are people shaping up in the crazy world of the pitch chat there? Are they liking these maybe comparatively lean vol levels? They're looking to buy some stuff here. Are they selling? Are they slinging any Apple going into the earnings?
I know Mark bought some strangles in there. They do look a little on the cheaper side, considering Apple's down like 18 or 19 points from the kind of the recent highs. So that was Friday when Apple was kind of in the doghouse. So he's looking a little bit smart today on that. We did that in the pitch chat. So I would say, yeah, Apple vol does not look very expensive, and there's been really kind of bad sentiment around Apple. Usually they're kind of the king of the rope-a-dope, where just everything looks awful and nobody's going to think they sell any of these $1,000 iPhone X's and blah, 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 blah. And then they come out and they just, they deliver some ridiculous number and, make another $50 billion for the quarter or something like that. So I'd be leaning in that direction, to be honest, in the buy category. I'm kind of waiting to see how it prices into tomorrow, but because unless you're doing something I think well in front of the vol, like 3 weeks before something, I like just kind of see how the volatility shakes out right into the end, because somebody might sell it. They might get a little cheaper going in, but we had a nice little 4-point move or something this morning. So, but the way I look at it, it does look a little inexpensive to me.
Yeah, things actually moving, and they're pricing in about $8. Again, we don't always counsel taking flyers here in earnings time, but if you are going to lean one way or the other, I certainly would not be in a hurry to blast away at this one. Again, I'll have to dig and see if I can find what the historical performance is for some of these recent numbers. But this is looking fairly, shall we say, I won't say cheap, but inexpensive. Mr. Uncle Mike, have these low levels of volatility, or maybe just in general the recent price action in Apple, have they caused you maybe to second guess your sitting on the sidelines, or are you still looking down your nose at all things Apple, sir?
No, we still have it as a holding in the Strategic Night Fund. We have it as a holding in our Triple Income Fund. We have it as a general holding, but to the levels that it was back in the episodes 100 through 200 or somewhere around that area, nothing along those lines. But I like Apple in general. I think that it's a good company. The thing about it right now is kind of like what Andrew was saying, going into earnings, just the stock itself has definitely gotten the tar beat out of it recently. And to add to what Andrew said in terms of Apple being the king of them, of making everybody think that the world's just going to go away and that Apple's finished, that nothing's going to happen anymore. And they're very good at surprising people. And when doing so, it wouldn't surprise me, even though they are good at surprising me too, but it wouldn't surprise me if they had a phenomenal quarter and had very unexpected numbers in terms of the sales of their products and possibly some new things. And the other thing to think about with Apple is that even though they don't really want to promote it a lot, it seems like wearables are becoming a little bit of a thing with Apple from what I'm reading throughout the financial news media. So wearables could come into play. Are they enough to get the TSLA Innovation Index to becoming the buyer of Apple with which it once was? No. But it is something to think about.
I'm with you on the rope-a-dope there, Mr. Rock Lobster. Microsoft used to be the kings of this back in the day, and then it seems like Apple has stolen a page from their playbook, because you're right, every quarter it's like, oh my God, no one's ever going to buy an iPhone again, and no one's buying our watch, and no one's buying the iPad, and oh, poor us, and the Apple TV, no one touches it, and then bam, they blow the doors off every quarter. Yet they buy it. The analysts buy it, hook, line, and sinker, every quarter. I don't know why, but c'est la vie. The options market, though, tends to be a little bit savvier. That's why we look there as opposed to talking whisper numbers and all that other nonsense. If Apple's not your bag, there's a lot of names popping off this week, listeners. Same day, we got Snap. Everyone's kind of on the Snap death watch these days. Is it dead? Oh, do the Kardashians like it this week? Who knows what the hell's driving Snap stock? It's such a ephemeral thing sometimes. Closing today right around 14.33 or so, up nearly 1%. So another one kind of bucking the trend out here, bucking the broad sell-off. This one also doing almost exactly even between calls and puts, doing about 110K out there contracts-wise, slightly above the ADV, but nothing really crazy. This one, again, closing right around 14.30. They're pricing in a little over $2, about 2.25. That works out to about 16%. That might be kind of rich, but then again, looking here and seeing how much this thing has moved of late, that's not a heck of a lot. That works out to, let's see, where are we right now on the old charts here? It looks like we got about a 30-day vol of about nearly 80, 78, and realized the 30-day of about 45. So a little bit more juicy out there than our previously mentioned Apple. So interesting stuff out there. Also, the day after, the name a lot of you guys like to either love or hate, or maybe a little bit of both, sometimes in the same day. Of course, I'm talking about Tesla. They were kind of a rear unched day for Tesla, ending up the day about 294 or so. So not quite able to get back above that 300 level, but not back in the mid to low 280s either, right around 294. Heading into earnings, I believe they're on Wednesday. Let's check. Wednesday for Tesla. And they actually 293, and they were pricing in about $23, so right around 8%. Also, let's see how that looks comparatively. That's about a 55 vol on the 30-day. Of course, we realize is actually a little bit above that these days. So one of those rare, about 60 for the realized vol of the last 30 days. Again, the last 30 days has been a very tumultuous period out there in Tesla land, going back all the way down to about the 250 sell-off, 249 actually back on the 2nd of April. So that 30-day time frame carries a lot of baggage with it. But still, interesting stuff out here. Mr. Rockloss, before we move on really quickly, any of your hardcores, I know you guys don't counsel these things, but the hardcores do what they're going to do. Are they any of you folks out here slinging any premium or doing anything out here? Maybe not Snap, but I know Tesla's on their radar. Tesla catching their eye at all?
Snap, we kind of become a little bit of a dead fish. I'm waiting for Snap to do the Twitter rise from the dead. I just haven't seen that yet. So not much in the Snap. Tesla, everybody's figuring out different ways to short it, but then buy a call. So it's been I think most of the Tesla action is usually pretty good on the day of earnings. So we'll see like at 9:45 tomorrow or whenever the call comes out, what looks good for Tesla. So nothing that has jumped across anybody. Also, this feels like they sort of survive earnings no matter how bad. No, they don't make enough cars. They don't do enough of this. They don't do enough of that. And yet the stock just never goes down on earnings. I have to say it's kind of, they've taken a page from, Ronald Reagan, the Teflon president? Nothing ever stuck to him. And I think Elon Musk is sort of, he's inherited that mantle for sure.
Yeah, there certainly seems to be a lot of that because you're right. The numbers are very rarely optimistic, and yet they always are equipped with a release or something else that tends to stem the bloody outlook and provide some sort of rosy outlook for the future. And at the end of the day, we all know earnings is really about guidance for the future, and so they always find a way. They're masters of that, if nothing else. And so speaking of Tesla, let's get into it with our op block because it's time to look at who was trading and what, including some Tesla mystery catastrophe puts. Now is the time.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we talk about all weird, wild, and wondrous things. Just so happens we like to kick it off a lot these days with our old friends, the Tesla mystery puts, catastrophe puts, call them what you will. They were lighting it up today, listeners. Let's start with our old friends, the Jan 2019 50 puts here in Tesla. Yes, 50. There's almost 54,000 of these freaking things open now. It was just 48 last week, I believe, or a couple weeks ago. So we already added 6,000, over 10% to the OI just in the span of a week and change. It's crazy. Another 600 hitting the tape today. These things coming off a little bit. They're a mere $1.40 now, Mr. Rock Lobster. They got up to close to $3, right around $2.90 back in all that heated sell-off period earlier in the month there. They're a comparatively cheap $1.40. Of course, they were trading when we first started keeping an eye on these things and saying, wow, someone really likes these way out of the money puts in Tesla. Back probably about a year ago now. They were about 30 cents. So they've had quite the run. Let's just pull up the chart here really quickly. I think we only go back 2 months here on the at least on the little graph here in good old back in March. Early March, these things were 50 cents. Yeah, we got to about $2.90. So these are 50 cents, about not even 2 months ago, about a month and 3 weeks ago. These things are 50 cents. So, yeah, it doesn't take a long look in the rearview mirror to find how low these things got. Of course, if those are too lofty for your blood, too rich for your blood, the Jan 30 puts, the Jan 25 puts, and the Jan 20 puts all lighting it up today, too. About $1.50 of the 30s, 200 change of the 25s, and almost 300 of the 20 puts, which are, in case you're wondering, right around 35 cents. Pretty tight market. They went out 34 at 35, so people have axes to grind clearly on these Jan 20 puts, and about almost 300 of the Jan 2019 par puts. Also lighting it up today, and let's go out to our old friend 2020 as well, because no one seems to care about March or June in 2020, but in Jan they like to play, and they're playing again to the tune of a little over 100, about 111 of the Jan 2020 50 puts, 12,000, almost 12,500 open on that strike, and a whopping 500 of the Jan 2020 20 puts. I challenge you to say that 5 times fast, listeners. Going up on the tape, 532 to be precise. These things also trading right around $1.40, $1.50 as well. Nearly 17, actually over 1,700 on the tape. So probably going to push over 2,000 of these things on the tape as probably tomorrow. So yes, short answer to everyone's question. Were those mystery Tesla puts, those catastrophe puts trading today? Yes. Mr. Rock Lobster, is this a new position for Carmen Line here, these 500 of the Jan 2020 20 puts here in Tesla?
We're thinking about it. I think Mark's been waiting for that stock to crap out. So I think one of these days it will. But for now, KL does not have a position in the catastrophe puts in Tesla. But I noticed they did list the 2020s. Seems like they listed them a little early.
Yeah. People obviously wanted to get their hands on. They don't want to touch June. They don't want to touch March. But in Jan of 2020, they want to play. Clearly, I think the calendar year must line up more with what these CDS guys are up to in terms of the contract specs that they're playing with, because they just want to blast away all these puts, or actually buy these things all day long and do so in mass. Let's move on here. Let's see what else we got lighting it up here today. Lots of weird paper going on here in ILG Inc, listeners. Ticker symbol appropriately enough, ILG, or maybe let's call it ILG. Closing today, $34.13, up about $1.50 or almost 5%. So not a bad day. Another one bucking the downside trend. So it wasn't all red on the screen, listeners, despite what the indices closing may have you believe. And what we saw today looks like a lot of perhaps closing or rolling paper. Before we get to that, we have this name does pretty decent paper, about 10, almost 11,000 contracts a day. Today doing 57, almost 58,000 contracts, 19-1 calls over puts. That's pretty much where our eye of Sauron was drawn, listeners. It started off with a funky spread going up here. It was the June 34-36, 1 by 2, going up 10,000 by 20,000 times. Looks like paper buying the 34s, selling the 36s, doing that. We'll see, for 35 cents there on the 36s, and for about $1.65 there on this, not quite $1, about 95 cents on the old spread, 10,000 by 20,000 times. And then we also saw later later today, we saw the May 34s going up. At the time, a block of about 7,200, total of about 10,000 going up on those strikes as well. Those kind of looks like hitting the bid perhaps on those as well. It is worth noting that we did see a 1x2 spread opening, because there is some size OI in the May strikes, 14,000 on the 33s, 16,000 on the 34s, and 23,000 on the 36s. So this has the whiff of being closing, and didn't see the paper going up on the 36s today in May. I think they probably have left that strike to die, because we did see that spread actually get open. A 1x2 opened back on the 20th of April, so that's 10 days ago. We saw someone come in doing a 1x2 for about 15 cents. It was 10,000, buy-in 10,000, again, same strikes, 10,000 of the May 34s for $1.05, selling 20,000 of the May 36s for 45 cents. So doing that whole thing for about 15 cents. It's now priced somewhere around 50 cents, so not a bad trade. Clearly, they're taking off the 10,000 of the 34s that are long, because, hey, that's what you do, right? You take off the winner, and then you let sit the 20,000 on the 36s, because what could go wrong with those? Those are no bid at 20 cents. I got a feeling you as a risk manager, Mr. Rock Lobster, will have something to say about that. Also worth noting, the May 33s seem like maybe of a separate trade. Those were opened back on the 4th of April. Someone bought 10,000 of those for 99 cents. Someone also came in and closed those bad boys out for $1.75 today. So making about 76 cents 10,000 times, as well as the vertical doing all well too, making about, 50 odd cents. I guess it depends how you only took off one leg. Depends how you price it up. About maybe 40 cents. But still, funky stuff here. And again, earnings are not quite, but there's still earnings in these June 1x2, because the earnings are the 3rd, so they're coming up pretty soon. And let's look at the chart here over the last year in good old ILG. And this thing's been on a pretty nice upward trajectory, kicking off a year ago, beginning of May, right around 23.5 bucks, getting up as high as about 30, almost 35. Back about a month and change ago, and right now it's kind of pushing those levels again, 34 and change. So we're floating near highs here, Mr. Rock Lobster. Our friend deciding to keep the 1x2 call party alive. Same strikes, which is interesting because we're a little bit higher now than where we were before. And also, how do you feel as the risk manager on leaving those short 20,000 May 36s open? Because, what can happen between now and earnings, right?
Nothing can happen, because there's no way that stock can go up $2. So it's one of those things where it's a head scratcher. I'm not quite sure. And the hardest thing is then they put a little more on, right? So isn't that, I'm looking at that and I'm saying, okay, they have it on here and now they want to kind of roll the dice a little more. I'm a little confused on it, I have to admit, on the actual. Sometimes things look so confusing that I can't figure out exactly what they want to do. And I have been looking at trades go up for a little while, by the way. I mean, I got the 1x2, I got close in the winners, but and then they roll to the June. It's very odd, unless there's some kind of takeover funk or something like that. I'm not quite totally sure. The only thing I'm looking at now is they kind of crushed the vol, so I'm wondering if they announced early or something like that in ILG. It could have been like a freebie, but they got their bounce today, so it's one of those ones where we could have had the action and they're doing it as a result of something else, or is it bought out? So there's something funky going on here that I'm just trying to wrap my head around.
Yeah, you're right. When we were trying to parse this one earlier today, it is a bit of a head scratcher, which is kind of what makes it fun. It's kind of what the odd block is all about. But it does have all the hallmarks. That's one of the reasons why I want to talk about it on the show. It has all the hallmarks of what some of our retail friends like to do, maybe on smaller size. But they buy the 1x2, spread goes their way. They take off the profitable part, the long, and then they leave those shorts. Because why would they cover that? Those are going to go out worthless, let alone the fact that earnings are coming up in a couple of days. And that 36 strike ain't that far away from the at the money. And then, it works out so well for them before. They put it on again 10 by 20 again, 10,000 by 20. The same exact strikes, not even changing the strikes. So net now, you're right, he's actually short 10,000 more units than he was before. So he's net short 30,000 units on this thing. So there you go, listeners. It worked out, and it may go his way. But I think if Mr. Rock Lobster was the risk manager for this guy, he might get the old tap on the shoulder and kind of like, what are you doing? Kind of whisper in his ear a little bit, like, hey, maybe you close those for maybe you work a nickel bid, see what you get to buy these stupid things back. Because there's no bid right now. You'd be the only player. Maybe you get a little optimistic. You work a penny and go from there. But just kidding, of course. But hey, yeah, this is an interesting one. All sorts of funk, which is why we like it. It makes the odd block fun. You know what else people seem to like today? Are stupids. In particular, a nice little put stupid going up here in OOP, aka UUP. This is the PowerShares easy for me to say. PowerShares US dollar index bullish. Ticker symbol, of course, UUP, closing today, $24.13, up about nearly 0.5%. Not a bad day for UUP. It's a name that does about 7,300 contracts a day. Today, doing about 24K, about 8-to-1 puts over calls. And that's pretty much because someone loved themselves a nice June put stupid and decided to put it on. I think they're just feeling a little bit indecisive. They couldn't decide, Mr. Rock Lobster, between the 24 strike and the 23 strike. So they bought them both 10,000 times. Buying the 23 puts for 3 cents, the 24 puts for 16 cents, doing the whole thing for a whopping 19 cents, 10,000 times. No, well, there's some OI, about 3,500 contracts, but clearly opening paper out here, listeners. And let's go out here and let's see what we got here on the old chart. Obviously not looking at an earnings type of thing here, earnings type play, but obviously a little bit of interest and or concern to the downside of late here in this dollar index bullish. I just like saying that. Kicked off the year right around 25.5, so not that far north of where it is right now. Got down as low as about 23 and change back in the January, kind of February tumults. It's kind of been on the rally home move again. It's probably one of the reasons why you've seen, of course, dollar kind of weighing on, concerning people out there slinging gold and crude. We talked about a lot on TWIFO of late. So someone perhaps deciding maybe a little bit of downside is in the future for the dollar index bullish, Mr. Rock Lobster. But they couldn't decide exactly where to go. Or maybe they just said, I really want a 23 half put. So they made one. Is that what do you feel on this one, Mr. Rock Lobster?
This is one where, do you think they're fading the dollar because of the Fed move, or the Fed, we're going to raise rates? I'm not sure. UUP doesn't move. Obviously, it's the dollar, so it doesn't move a lot, but it does move a little bit. Pretty low vol product, but I do see this as, potentially either they're just long out the wazoo and they want a little hedging, because we haven't had a huge rally in the dollar, and it's really weird. Like, what caused it? I'm not quite sure what the catalyst for the dollar rally was. Somebody thinks there's a reason for it, but I'm still finding it a little bit a little odd and a little suspect overall as to why we have such a big rally in it. Our rate's going to have to increase here. So there's some strange stuff, and this is certainly, the 23 puts, risk control. It's kind of a tough one as to why you would, because those really they look like they have no chance in reality whatsoever, but they're only 3 cents. So what the heck? So, a couple of interesting put buys. We'll see. I don't know if I would want to sell a bunch of those 24 puts for 13 cents, but anyway, as far as trying to buy some of these things and buy the stupid, I think it's a little bit of hedging going on after kind of a pretty sizable rally.
Would you have any interest at all in those 23 puts for 3 cents? I mean, if they came to you and said, I want to buy 10,000 more, one strike below for 3 cents. I mean, you as the risk manager, what would your response to that be? Or the capital efficiency police, maybe?
I would say at a nickel. I don't see that. I don't see that sale. But I could see some desk that's long a lot of treasuries or something like that, or or that has kind of the risk, the other side, or somebody that owns or that has the ability to let's say margin like a big treasury portfolio or something like that. I could see them just dumping stuff just because if they're long so many bonds and it's a flight to quality thing, they just write the crap out of stuff like this. So the only thing I could see is that's where the supply could come from without too much trouble. But I would say from just for the average Carmen line trade, I don't know if we want to sell just 10,000 of them for 3 cents. Even though they look like they're going to go out worthless, but somebody clearly thinks not.
Yeah, and someone spooked enough to buy those crazy things. So there you go. Someone liking those crazy puts there. Speaking of crazy puts, let's wrap it up with Dean Foods, ticker symbol DF. This is our resident cheapie here, $8.61, off nearly 2% today. So kind of following the market to the downside, perhaps a little bit more. This name does a whopping 959 contracts a day. Today doing nearly 1,745 to 1 puts over calls. Yes, of that 20,942 came on the puts, 12 on the calls. So let's talk calls. Of course, we're going to talk puts. And it was the D7 puts. Someone liked these, and they liked them a lot, to the tune of 20,000, going up pretty much on the offer, which you kind of got to do in a name like this, which doesn't trade a heck of a lot. Lifting the offer 20,000 times for 40 cents. About 1,400 contracts open, so clearly this is opening. Worth noting, there are earnings on the 8th, but again, you're not going to play D's if you're playing earnings. This is a longer term. This has all the feel of a longer term underlying holder deciding to protect themselves. Shall we get a little bit shy of the 7 handle to the tune of right about $6.60. Let's look at the chart and see how that lines up of late, going back a year. Wow, this guy a little bit late to the party buying puts. Hopefully he bought some earlier than this. It's kind of been a long road to nowhere here for the last year in Dean Foods. Kicked off a year ago in May, almost $20, about $19.88. And then every successive earnings announcement seemed to kind of clip their wings a little bit more. They got down to about $12 in July-August timeframe. They got down to about $9.50 back in November. Kind of rallied a little bit after that, up to 12. Then right back down again, clipped again in the February earnings. Just not a lot of love for Dean Foods. They've kind of been wallowing around this level, and now someone coming in, perhaps a wee bit concerned about a little bit more downside, saying, you know what? 6 and change, that's where I'm out. You're stopping me out there, and willing to pay 40 cents to do it, stop himself out for the rest of the year at that level. Interesting stuff, Mr. Rock Lobster. You have the same whiff that I do. This has the air of a long stockholder deciding perhaps enough is enough, this far, no farther.
You know what? There's the line in the sand put, and then there's the uncle put. I'm not going to disagree with you that this is feeling a little uncle-y to me. Like, I had enough. I don't want it anymore. And I'm going to stop here. I could see that. I could see it as a put in stock play. This is another one on the, it's another one on the value list. Isn't Dean Foods? They make milk and stuff like that. And they're not I remember them as, they were a takeover target a while ago. So this is why I love this show. I find so many good value play ideas on the show. And, you take your time a little bit and kind of see how things play out. But I like the price signal. If for all you home players, I don't necessarily, I rarely just follow the trade as is. Maybe that'll be a show out of the Option Insider later. But, you take the volume you see and the name, something you probably don't look, do a little more investigation and try to craft something that sort of rides the potential that might have some decent edge to it. So this could be one of those. I like these little junky value plays when the market's doing crazy stuff like this. So I could see how something could be afoot here, but this is either a put in stock buyer or an uncle put buyer, it looks like. So, and I mean, it took the vol up a little bit, but
Yeah,
I mean,
you do.
Until they cut the dividend, it's like there's like a 9-cent dividend. They've been paying a 9-cent dividend for how long? I mean, they've been paying a 9-cent dividend for quite a while. A normal dividend. I know they had a big cash payout a few years ago, but still, this is it doesn't look like it should be an $8 stock. But you know what? When Amazon's going up $150 in 2 days, who the heck wants to buy Dean Foods? So, but $8 to $12 is a pretty good return if that can happen in a year. So I'm not picky on how I make the money.
I'm saying, if I could read between the lines for you here, I'm smelling. I know you won't go out and just put on a bullish risk reversal, but you sell the put. And then you'll kind of wait. And then if it starts moving, then you'll pay for the call. Is that kind of the gist I'm getting?
That could happen. That could happen. And maybe make some divvies in the meantime. So I could actually see doing the opposite of this trade and just selling the D7 put. But I got to do a little more research. I used to trade this name a long time ago, but I haven't looked at it since. But what's good about if to use kind of the odd block stuff is usually you see this size paper when it's when things are at an inflection point or when it's like somebody's drawing a line in the sand or uncle or whatever. But options are good for when underlyings move. So that's when you want to take a look at them. And normally, instead of just scanning for stuff, you just look for interesting volume that coincides with multi-year lows in the stock or something like that. And then an opportunity, a real, it's not a day trade, but it certainly could be a decent money-making opportunity if you structure it right and you understand what you might end up with when it's all is said and done.
Yeah, in this case, it's not a day trade. It's more like a rest of the year type trade. At least if you go for D's. Hopefully by now, listeners, listening to the Odd Block enough that when we tell you these things, it's not usually to tell you to go that way, but often to take advantage of the distortions that are caused by, in this case, a massive whale coming in and lifting the vol across December. A lot of things you could do with that as a result. Speaking of things you could do, maybe Uncle Mike's got a few in store for you as well, because it is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners, this is, of course, a portion of the show where Uncle Mike comes on down from, I'd say the mountain, but there really are no mountains in St. Charles. It's very flat. So more of the nearby hillock to dispense some options, wit, and or wisdom. Uncle Mike, we're kind of bouncing around in the market these days, a little bit of upside, a little bit of downside. These kind of sideways, kind of bouncing, kind of channeling markets, they get my itches up to harvest a little bit of the old risk premium. What say you, sir? Are you feeling what I'm laying down?
Oh, I feel it. I want to go talk today about how to or some ways with which I like to look at covered calls in a channeling market. Markets are either going to be going up, they're going to be going down, or they're going to be kind of channeling or staying the same. There's really no other alternative to those three things, or it's just going to kind of be, or it's going to be some type of a mix of two or all three of those things. So what I wanted to go through today was what we are kind of experiencing right now as a channeling market. And I want to go through some ideas that I have and that I like to do when we are in a situation like this. So a couple things on it. Let's assume that we own the underlying to start with. Let's assume that we've either gotten it put to us or we just bought it outright, whatever the case may be. But we own the underlying. And what are some things which we can do for covered calls? Well, let's start by saying that we're selling out of the money covered calls. Now, whether you want to sell in the money, at the money, or out of the money, that's a whole nother strategy block. But let's say that we're starting off with selling an out of the money covered call. Now, I've talked about this on the show before. The typical exit point, for me anyway, or what I like to do, it doesn't happen every time, but a lot of times what I like to do is when the covered call or the short call that you sell, you can exit the position for 80%, while capturing 80% of the initial premium you selected. So let's say that you sold the short call for $1. When you can get out of it, buy to close the short call for 20 cents, it's at that point that I like to get out of it. I've said on the show before, oftentimes short premium, it's like a paper towel or a sponge or a rag, whatever the case may be. If you get it wet and you squeeze it out under the sink, you can get a lot of the water out of it, but that last little bit of it, it'll never be completely dry from you squeezing it. And by trying to get that last 20%, I always think of it as trying to squeeze out those last few drops out of a paper towel. I think you're better off just letting the paper towel sit there and going and getting another one if you're looking for a dry rag or dry paper towel. So with that being said, what do you do after you've bought to close the call? Let's say the stock went against you a little bit. What are some things with which you can do? Well, a couple things. You can sell the same strike price for the next month. You may or may not get as much premium, but you can still definitely look at it. Or you can do a call spread. We've talked about that on the show before, and that you can, instead of selling a covered call, you can sell a call spread, maybe a little bit closer to the money. So let's say the stock's gone down a little bit. You could sell a lower strike price to collect a little bit of income, and then either buy another call above it. So that way, if the stock does just race back to the moon, you'll still be able to race up with it. You'll just have a little bit of a loss on the call spread, but a covered call would take away all that upside. Or the other way with which you could execute it, you could sell a covered call at a closer strike price and then put a contingency on. Make the contingency saying, I want to buy the other leg of the call spread should the stock touch the short strike price that I have right now. So let's say that the stock continues to go down. Well, you're continuing to collect premium on it. Obviously not in the way that you wanted, but you are at least able to collect premium on it. But if it does go higher, you will buy the out of the money call on it to protect the stock from going a lot higher. Now, of course, the disadvantage to that is the fact that this will happen at some time in your trading career, most likely. The stock will just touch the short strike price. You'll buy the long call, and then it'll start going down again. Stuff like that happens. You have to be mentally prepared for that. But if you do have concerns of that, then I would suggest just selling the call spread from the get-go. Now, here's the other choice that you have if you're getting out of a covered call and the stocks come down a little bit. Hold the stock for a little bit. If you were bullish on the stock to begin with, there's no rule that says you're not allowed to just hold stock. You don't have to have an option strategy on, but you could. You could hold the stock, and then if the stock comes back up, then you can sell a call, or you can decide, well, you know what, I don't like the premium on this anymore, but I still like the stock. I'm going to hold on to it. That's another choice. And if the stock does continue to go lower and you don't have a short call on it, you'll still live to trade another day, most likely, because of the fact that at some point, you'll get another opportunity to sell premium somewhere, somehow, on some underlying. So with that being said, those are some things that you can do when the stock goes against you. Now, let's say you get called out of the stock. Well, of course, you can sell another put to get into the stock and then rinse and repeat, start the process over again. But let's say that the stock's a little bit too high to sell any put that's worthwhile. Let's say in order to get back in at the strike price that you got called away, you'd have to sell a put for a nickel on a $260 stock. Well, obviously that's not something that you want to do. So some alternatives with that, you could actually put out a limit order, not necessarily on the stock, although you could do it on the stock, but you could put on the short put in a good till canceled limit order until the short put gets up to the price that you desire. Then you'll just sit in cash. Wait for your price. Let the market come to you. Of course, the risk to that is that the market will go much higher during that time frame, or that would be the risk, and you'd miss it. But that is something to do. So I encourage everybody to have a plan of how they're going to handle good times and bad with premium selling, because it doesn't always work like you hope it will in the books that you read, and that you can make 1% a month selling covered calls. Well, yeah, you can, but you need to be prepared for situations when you don't. And that is the strategy block for the last time in the month of April of this year.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is, of course, usually a breakdown what we're watching until our next show. It's actually an important one this week, though, because this is going to be our last live option block, at least for the rest of this week. Like I mentioned, we're heading down to the big options industry conference this week. It's kind of the meeting of the minds for all of the brokers, exchanges, trading firms, vendors, everybody you name it, who's who in the world of options. They're all heading down to Florida. We go down there every year. We do a lot of great content. You guys probably know. You checked out our stuff. We get all the panel audio exclusively for you guys. So stay tuned to our network. You don't have to go all the way to Florida. We bring it to you. And you guys can hear all that stuff completely for free coming up on our network, probably maybe next week when we get it all back and cut together and everything like that. But we also do a lot of our interview shows down there. I catch up with the entire world of options over the course of this coming week. So I'm going to be talking a lot, if not quite, on the network. Stay tuned to the live feed, though, because we might, depending on the connectivity down there, we might be able to live stream some. If you get that worked out, then stay tuned for an explosion of content, listeners, because there's going to be a lot of shows coming your way this week on the live stuff. Either way, stay tuned to the network. A lot of stuff is coming. One of the things we wanted to ask you guys this week, though, we'd like to ask our questions of the week, is, of course, it's the time of year where we go down there, we get to catch up and with all the options world, and also ask them and to just talk with them about the big issues facing the world of options. So we thought we'd ask you guys, what do you think should be numero uno on our agenda this year? I also wanted to ask you guys, Uncle Mike and Rock Lobster, this is your time now. If you have pressing issues you want me to take up in your stead with the exchanges, the brokers, everybody else out there, now is the time, folks, to ask away. We gave you guys three choices. We said you want us to talk about options liquidity issues, listing crypto options, when, where, how, when we're going to get these things, or you want us to talk about after hours for options traders, or do you have other choices and other suggestions, in which case, let us know now. Let's start with you, Mr. Rock Lobster. If you have a vote, which one is it? Or maybe you have an other, something else we don't have the list that you think we should address. Now is the time, sir. Have at it. Just
stop creating exchanges.
That's an easy one. That's how many exchanges is too many? We can do that every year. Every year it's like by clockwork.
I'll tell you what, I would obviously the exchanges, I don't know if this will ever happen, but I would like to see payment for order flow disappear. I still think that's kind of never was a great trend to start with, although it's 20 years old now, probably at least. So I would like to see that go away, and I would like to see a lot more individual liquidity back in the marketplace. But that's just because I'm a dinosaur. So,
so I will put you down for options liquidity issues is the one you want to see us address.
Yeah, that one you could put that one in. But
payment for one, that's not a bad one too, but that one I kind of stopped talking about that a while ago because it doesn't seem like there's any real changes on that front. It'd be nice if there were, but c'est la vie. Mr. Uncle Mike, what is your vote? And then B, maybe you have an other we don't have on the list. Have at it, sir. Now's the time.
I think we need more exchanges, and I think we need more payment for order flow. No, just kidding. Just wanted to see if I could make Andrew's blood boil for a moment. No, I think that option liquidity is something that is important in a lot of realms. We talked about that a little bit on the show last week, but I've been wanting to buy me some Bitcoin puts for a while. See if you can get me some Bitcoin puts out there, Mark.
There you go. I will do my best. I will fight the good fight on behalf of you folks out there. I would like to have some crypto options myself. This underlying trading's for the birds. Give me my options. All right, well, vote on that poll if you haven't. If you have some other suggestions, hit us up. Stay tuned. That music means we're done here, but we're not done for the week, not by a long shot. You will get some best of shows coming your way in the feed, so if you subscribe to these shows, you want your Thursday option block fix. We'll get you covered with the best of. Friday vol views and Twifo also going to be best ofs this week while we're out there burning the midnight oil, chalking away with everybody this week. Stay tuned, though, to the network. Stay tuned to our live feed. Stay tuned to everything else, because I got a lot of shows coming your way in the next few days, so stay tuned for those. But before we go, let's go back around the horn one last time. By the way, right now, winning our poll, 50% saying options liquidity issues. So we will definitely get into that this week with all the heads of your favorite exchanges and brokers and everybody else. But before we go around the horn, let's start with you, Mr. Rock Lobster. Let's say, for example, I was intrigued by the notion of making not just VIX, but related products like VXX easier for my trading lifestyle. Where should I go? What should I do?
Oh my gosh, go to our website and sign up for the VXX Made Easy class. If you subscribe before May 20th, we'll give you my VIX Made Easy recording with it if you subscribe to the new VXX Made Easy. And you can check out and see how my vol newsletter does startlingly well. And I'm going to get all the track record and everything all gussied up for that, so everybody can see actually all the trades, how I do it, and the ins and outs of actually trading volatility in a semi-intelligent way.
Not fully intelligent, semi-intelligent. Check it out. That's not a bad deal. You get the fix made easy for free. So head on over there, optionpit.com. You too can get all that good stuff. By the way, Uncle Mike, we got Option God in the chat listening and saying he wants to know, is St. Charles a real place or just a magical nirvana for options traders? I've been there. I can attest that it does exist. They have delicious gyros, Mr. or Mrs. Option God. So it does exist. Uncle Mike, you can confirm St. Charles' existence, and B, if I want to go out there or perhaps just contact you and roll some options and all the other fun stuff, where should I go? What should I do?
Oh, by all means, give me a call, 312-212-3531, or shoot me an email at mtosaw@rcmfs.com. We'll discuss option trading, long-term investments, and if you become a new client, I will give you an Option Pit $100 gift card. Call now.
There you go. Hit the man up or email him, mtosaw@rcmfs.com. You want him to discuss things like writing calls in a channeling market, all the other fun stuff that he does over there. Want to babysit your puts so you don't have to. You can go play with your kids, do all the other fun stuff you want to do. Let Uncle Mike stay up at night sweating and worrying and harvesting that theta for you. He can do it. mtosaw@rcmfs.com to learn more. On behalf of Uncle Mike and the Rock Lobster and indeed myself, I want to thank all of you out there for joining us again. Stay tuned to this feed, the live feed Mixler, kicking off, I think, around Wednesday. If we can get all the connectivity worked out again, that's a big if. We're going to be on an island off the coast of Florida. Sometimes the connectivity may not be conducive to live, but if we can make it work, you'll be hearing a lot from us. And if not, stay tuned to the network because you'll be hearing it there as well. In addition to panel audio from the big Options Industry Conference. So a lot of good stuff coming your way, and we'll be talking to you soon. Stay tuned.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.